welcome back to the YouTube channel. And today I'll just be doing a quick trade review on, we're Friday right now, but we'll do a trade review of the trade I took yesterday, Thursday the 23rd. It was a long on ES, and I'll kind of just be doing a analysis. I'll be drawing out the PD arrays as we go here. So let's start off on the daily. Overall, just wanted to say since we had some crazy price action on Tuesday, Monday with Trump's inauguration, I've been mainly looking for buys. I've been very bullish with the strong upwards movement we've been having. So that was my overall bias on the higher time frame. Now, specifically for Thursday, on the daily time frame, we did expand past this swing high right here. Once we expand past a swing high on any higher time frame that's previously led to aggressive downward moves, like this one right here, which took out, will create relative equal lows and then takes them out and dips into another breaker here. Once we expand past that, I want that to turn somewhat into an order block, or technically more of a breaker in this case. So as you can see here, we get a perfect tap, like just a beautiful tap into it on the daily time frame. So that's PD array number one that I was basing my longs off of for Thursday. If we start dropping into the 4 hour, well, actually not the 4 hour here. Let's go down to the where is my new week opening gaps? That is so weird. Whoa, that's not what I want. Bear with me here, guys. Weekly opening gap. Bang, there we go. 45. I don't want 45 of them. I want a cool 9. And speaking of new week opening gaps, in the coming days or weeks, I'll start talking a little bit more about my strategy and how I use new week opening gaps to identify different market profiles and understanding when we're consolidating, when we're expanding. So yeah, going down to the hourly time frame, we had this previous day London session low. So we had some liquidity here. This is what I like to call low resistance liquidity, as it's within an area where price will tend to retrace either way. So we do have that liquidity plus fair value gap here, of course. And also, what I have yet to mention is if we go back on the daily here, we also had this large liquidity void right here. So we had a liquidity void here, which we expanded through and out. We had this breaker. On the daily, we already had a push lower, also PO3, of course. And now we're on the 1 hour and we're saying, okay, where do we think price is going to go? Well, we think price is going to go higher. So what do we want to see? We want to see a retracement, a grab in liquidity, and we want to see PO3 play out. So we mark out our 12 a.m. open, which is right here. We have the liquidity grab overnight during London session. And then now here we go to, let's drop down to the lower time frame. Oopsie. So now we drop to the lower time frame, and we have 8:30 a.m. open right here. So we have price that displayed PO3 with a 12 a.m. open. We came down low. We grabbed all this liquidity. Once we're in this zone, we expand higher, bounce off of these breakers here, and price continues here. Now, I'll be talking a little bit about the emotions and my mental process throughout this trade because it was a little bit of a roller coaster. And at one point, I was thinking the market was going to go against me, which when you're trading, you always have to assume that the market is going to go against you. You don't want to enter trades thinking it's always going to go your way, or else that'll just lead to bad decisions being made and imbalances in the emotions you're feeling while you're trading, which is the last thing we want as a trader. But as you can see here, once we go down to the lower time frame, the 1 minute chart specifically, we had quite some choppiness in the morning, right? Like you could see price came here 8:30. We dipped into the 12 a.m. open, dropped lower, didn't really, no liquidity really taken here. So that kind of left us thinking as to should we be seeing a liquidity sweep beforehand. But from a market structure standpoint, we're really focusing on bullishness, and we're focusing on it on the higher time frame. We don't want to get lost in what's going on in the lower time frame. We just want our confluence to play out. So as you could see here with that 8:30 a.m. open, price consolidates around it around 9:30, and then finally just after 9:30 we do get an expansion upwards above the highs here, and finally we get right here this fair value gap that presents itself. So we have this liquidity sweep down here below relative equal lows and an expansion. So we have our market structure shift, and a fair value gap presents itself in a discount since we're buying. So our entry was right here, and considering the 8:30 a.m. open was within the displacement, I could have very well also put my stop loss here, sorry, my entry here. But my goal is to get filled in, not to get the best entry considering the model I'm trading. So I always put it at the beginning of the fair value gap. But that is one thing you guys should definitely know. If you're a high risk to reward trader, putting your entries, if there is a 12 a.m. or 8 a.m. open in the vicinity of your entry, especially the displacement like a fair value gap, that will give you such a better hit rate with high risk to reward trades. At least from the back testing I've done on it. And here I was targeting just above these highs here, and as you can see from like, we got filled in exactly at 10:02 when the start of the silver bullet happens, and we had a lot of consolidation here within this area. And okay, so let me talk a bit more about the emotional side. So this week has been seek and destroy, if you could tell. So as this trade's going on, I'm thinking we have so much liquidity here. Like we have low, 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 low. I was starting to second guess myself a bit, and that's just me being honest with myself. But yeah, I of course I ended up sticking to the trade. I don't take partials. I don't close out trades early if I think they're gonna go against me. Those are things that when I was starting out to trade, were mistakes that I was making when I really didn't have trust in myself and trust in the process. So I came to learn that if if you have how do I say this? If you are developing a trade plan before and a trade idea, the last step in that trade plan is executing on it. Once you're executing on it, it's done. There's no there shouldn't be any active managing of it. I'm not managing, I'm scalping. I'm scalping the 1 minute time frame. I'm not managing those trades. They're winning or they're losing, and I'm letting the percentage and the edge of my trade plan play out. So that's something that I think if some more people incorporated, they'd be a lot more profitable. But hey, I'm glad I incorporated here. So usually I go for 1-to-1, but right now I'm in the process of trading Top Step Combine. As I previously mentioned, I'm moving towards futures market. So here I just started the liquidity resting above these highs during the 950 macro. And going back quickly on this liquidity here, the main reason I trusted it that it was not going to get hit was because of NQ. And this is the beauty of SMT divergence. We have to realize, guys, we're already in the higher time frame. We're already due to expand higher. We dipped below liquidity, we rebalanced, and we're expanding. On the daily time frame, we're expanding aggressively. And that's the beauty of the new week opening gap market profile. That was able to tell me how aggressively expanding. Because guess what? There were a bunch of accumulated new week opening gaps earlier on in the week. We expanded extremely aggressively through them, and we're reaching new relative not relative we're reaching new highs in the index markets. So that's just telling me that every day we're slightly going to retrace and we're going to expand higher. Now we're Friday, so we're probably going to see a thank God it's Friday setup play out, considering all the bullishness. But let's go down here. Let's just go to yesterday's price action, and here all my drawings are actually out. I'm not sure why they weren't on S&P, but boom. So this is micro. Let's go yes. Oh, there we go. It was on S&P. There we go. So as you can see right here, I did forget that I took this trade on not on the minis. I took this on the regular contracts. So that's why my annotations weren't up. But as you can see, we had beautiful SMT. Beautiful SMT. With NASDAQ, we ended up taking below these lows. And we had the same setup play out. I mean, the displacement wasn't as beautiful. We had a small fair value gap here. Here we had a nice, better, more emphasis on the fair value gap here. It was larger. We also had that 8:30 a.m. open. We were kind of below the 8:30 a.m. open here. I like when we're utilizing these levels more or less as a support. But yeah, that's I saw this SMT and I was like, okay, well that's just my last indication that this is a good trade setup to take. And if it didn't work out in my favor, then so be it. I mean, that's what trading is at the end of the day. So yeah, this SMT here verified my trade. And yeah, besides that, guys, thank you to the one subscriber I have on this channel officially. I find that pretty funny. But yeah, I'm sharing these videos to help for whoever is watching, to help them and also to help myself. So I'm glad to be doing this now. And yeah, I mean, if you guys do have any recommendations in the comments, go for it. I'll gladly help out. Anything content wise you'd like to see related to trading, Discord, if I should start a Discord, all that good stuff. So yeah, thank you for watching this video, and I'll see you guys soon.